I think it's turning out pretty good. Look at this. These are the lows for the day. I think we are doing much better. In fact, the lows for the day hit early morning trade, and then the highs also hit somewhere around those levels. Banks, Nifty IT is down. So that's the first point, that if you get Nifty IT 1% lower and drag lower by a clutch of indices, clutch of large cap stocks, and banks should come up on your screen just to show you the reversal. It's not in the green, but it's lying flat, which is not a bad thing. Now, get the advanced decline ratio and then get the heat map up on the screen. First, the market breadth, just to show you what's happening there. And look at this, the widening of the gap that happened. In between, there was a bit of a pullback, but I think we widened quite considerably. So the advanced decline ratio is positive as well. Get the heat map and you should see IT down below. Right here, TCS 1%, 1.7%. There is Infosys, which is down 1.2%. LTI Mindtree down about 1%. There is Wipro down about 1% as well. And Tech Mahindra about 0.6%. So IT per se has sulked, and HDFC Bank is also down in trade. But flip that argument and look at the gainers. PSU's up there. BPCL up 4%, NTPC up 2.5%, Power Grid is up about a couple of percentage points. Then there are other stocks. Asian Paints is up 2.4%, Adani Ports up 2.5%, Hero MotoCorp another 3% in trade today. It's largely, you could actually say that Hero MotoCorp is the large cap stock of the week really, by virtue of what it's done over 3 days on a trot. Today there's an HSBC note which projects a 19% upside for Hero. So clearly it's been the hero of the week, but you could safely argue that just the breadth of the market is so positive that you take this 0.2% gain as well with both hands and say that it's looked a very nice, stable move in the session today. And Tamanna, considering that it's coming after a day like yesterday, this is not something that people should complain about.
Oh, no, absolutely. And considering that the biggest losers are your IT pack, it's not a broad-based kind of a downside. IT and a smattering, I would say, of financials. But BPCL, really exciting. We'll pull up BPCL and HPCL in just a sec, but let's just see what the broader indices are also doing before we get to those and what's happening. We'll review it, that's all right, what is happening on the mid cap and the small cap end of it, and what those indices are doing. Let's just pull up some of those points and see what's happening. And the mid cap 150, they're looking strong. Small cap index also relatively strong. So the action really over there. Some gainers and losers that we wanted to point out, the ones which are sort of the buzzers of the day. Intellect Design, one of them. And again, all about the numbers, the big upticks and downticks coming in as per the numbers. So Intellect Design about 14% down. We'll pull up Cipla also in just a bit because numbers are coming in and we'll see what impact that's happening. But before that, Polycab. The numbers have really enthused the street. It's actually off its highs of the day. I was up 8% at one point, now up about 6% right now. So Polycab doing well. HPCL and BPCL we should pull up together. BPCL, of course, because of bonus issues and numbers, etc. HPCL also a bonus issue, but not having that kind of a good day as maybe a BPCL did. Dr. Lal Path is the other one. That has been very positive on numbers, up about 6%, and Vijaya Diagnostics I would add to that list on the back of a positive Novama note, again 8% up. But let's just see what's happening with Cipla for a second. The numbers there on your screen, and on the face of it, not very, very positive. Let's see if we can pull up the intraday chart as well. I want to see if there's a downtick after the numbers are out. The net profits seem better than Bloomberg estimates. The revenues a tad shy of Bloomberg estimates as well. EBITDA also shy actually of Bloomberg estimates. So that's the first cut of the Cipla numbers. And Niraj, I reckon that's going to be one stock which is completely buzzing in trade today, as will be Tata Motors.
But I think the margin number, Tamanna, seems to be a bit of a disappointment, which is why the stock has come off a little bit. On the revenue front, it's kind of marginally above what the Bloomberg estimates were, if I'm not wrong, but the margin performance slightly below, and which is what probably would be concerning the street a little bit. About a 1% lower downtick coming in. At some point of time in the show, in this segment, we'll try and get Varsha to just do an analysis of what the Cipla numbers look like. Net profit has beaten estimates, as I said, but the margin performance slightly wobbly, 1.5% lower now. Kunal Shah, technical and derivative analyst at LKP, is with us, and we'll talk about the fundamentals of Cipla as well. We'll talk about the markets too. But Kunal, good afternoon. May I request you to pull up the charts of Cipla or the derivative picture of Cipla? I know it's just happened right now, but would love to understand what's your initial impression of the reaction that Cipla is showing.
Good afternoon, Niraj. I think first I'll talk about the Nifty Pharma Index. So I think Pharma Index is showing some kind of resistance on the higher end. There's a clear-cut and negative divergence which we can see on the Nifty Pharma chart. So that is not looking very good. I think a near-term pain could be there in the pharma sector as well. The lower end support for the Pharma Index is at 18,400. Once we breach that mark, we will see further selling pressure towards 18,000, 17,800 mark. So as an index, pharma is something which I'm not liking for the near term. If we talk about Cipla, definitely after the kind of rally what it had got, it has been underperforming since quite a long time. And still the trend has been on the lower end where lower high, lower low formations are currently intact. So I expect some further downside into the stock where it can test the 50 EMA, which is placed at 1290 zone. So still from the current levels, 40 to 50 points dip is left. So my view remains bearish. Clear-cut resistance is visible at 1380, 1400 zone.
All right, Kunal. So Cipla, the market not really loving those numbers, even though margins have gone up, but perhaps a little below estimates, and we'll get a view there. But even as we break down Cipla, I just want to get your take on the indices that have been holding up fairly well. Relative to what was happening yesterday. Any calls on the Nifty, Bank Nifty and the IT Nifty actually, if I would add, Kunal?
Yeah, I think firstly, I'll just talk about the markets. If we talk about India VIX, that is where the real spike has been, and it is sustaining above that mark of 19. So the volatility is going to be there for the upcoming week as well. Now today is going to be a weekly close for the markets, and if you look at Nifty and Bank Nifty, both have given a very negative weekly closing, and they are just on a very critical support zone. So for Nifty, I'll just talk about 21,800 is the last hope for the markets. If that is even breached decisively in the next week, then even we'll see correction going to the 21,200 mark as well. So I think it's a wait and watch situation there. For Bank Nifty, you can say the larger part of the correction, what we have seen is over. Now the next immediate support for Bank Nifty is at 47,050, which is the 100-day exponential moving average for the Bank Nifty. So probably there I can see Bank Nifty settling down a bit, and probably a pullback rally we can see from those levels as well. So for the levels perspective, I'll say both the indexes are currently not in a tradable zone because they are at a juncture where Nifty could, if it breaks below 22,000 again, it can see a quick 200-point fall on the downside as well toward that 21,800 mark. So let us wait and watch for the market perspective on headline index. Stock specific is something where one should keep an eye on.
We'll get to the stock specific. The specific stock we want to talk about at this point is definitely Cipla. It's reported as Q4 numbers. Profit has jumped 78%. Margins have expanded. Street is still not happy. Varsha, what's the issue? Were the expectations higher? Where is the sort of niggle?
Actually, Tamanna, if you see Cipla's revenue, if you see, was up almost 8%, which is in line with the expectations. But net profit was expected, rise in net profit was expected around 66%. But we did see net profit have risen almost 78%. We are just waiting for the press release to come so that we can get to know about their Goa facility details and also how much Revlimid have contributed and the other products which have contributed also. How much is the US contribution. So let's let the press release come and we should know what are the key details for it. But yeah, revenue did beat estimates.
Varsha, why is this disappointment? Is it because the margins were expected to expand to 22 and they haven't reached there?
So margins were expected at 22% and we are seeing almost 21.35% margin. So maybe that is the reason, but we need to see what is the Revlimid contribution to the company and also the US, how much it has contributed, and also the update on the Goa facility, because a lot of product launches have been on the way because of the Goa facility OAI status that company has been given.
Okay. Okay, Varsha, get your point. Thanks for giving us this first quick update. But clearly, not enough clarity as yet, but could be the margin miss which has resulted in this. Remember, the market has been very brutal in punishing stocks which haven't quite lived up to expectation. I would reckon this is it. We don't have more details. I think we'll wait for the press release to come in before we try and talk more about what Cipla's numbers are. Suffice to say, except margins, on the other counts, I think the numbers largely meeting or maybe even beating street estimates. If spoken about sales and what's happened in the quarter, so on and so forth, we'll just wait for those numbers to come out. We've got on the view on Cipla, of course, from Kunal. Kunal, what are the stocks that you're recommending in the session today?
See, the first thing, I have two buy ideas from the current levels as well. One stock which is showing a great momentum in this falling market is Deepak Nitrite. The stock has been sustaining above its critical moving average of 20 DMA. So we have been seeing buying from lower levels. So Deepak Nitrite is a buy at the current levels of 2480, keeping a stop loss of 2425 and looking for targets of 2600 on the upside. The second stock, which I think is ready for a pullback after the correction, is IEX, Indian Energy Exchange. Again, the stock has been taking a support at its previous support levels where multiple bounces we have seen. And even in today's trading session, we have seen volume-based buying from those levels. So 145 is currently where the stock is trading. Keep a stop loss of 140 on the downside and look for a target of 152 on the upside.
Okay, so those are the big, bets at this hour. We'll take a very, very short break. But on the other side, we're talking about Polycab, the other stock that's buzzing in trade today. That and a lot more coming up. Stay tuned. Welcome back. Let's talk about the stock of the day, and that is Polycab. Numbers is what has enthused the street. That stock up over 7% now, over 6% off its day's highs, but still doing very, very well. After the numbers were better than expected, Puneet is joining us now for more on this. Puneet, what really has worked for Polycab today?
Well, as you rightly said, the Q4 numbers have been really strong compared to the estimates as well. On a revenue basis, it's up roughly 29% compared to the previous year, while on the EBITDA basis, it's coming at roughly 25% growth compared to the previous year, coming in at roughly 762 crores. Now, if you look at it, there is a growth, but the margins have come in at roughly 13.6% versus 14% compared to the previous year, while profitability is strong, roughly coming at roughly 29%. Now, if you look at the stock, what it's done, do remember that there was a tax trouble that the company had in the month of January of 2024, where it had roughly, the income tax department had found roughly 1,000 crores of unaccounted cash. Now, post that, the stock had nosedived and reached a low of roughly 3,800 rupees. Post that, the stock has given a whopping 58% returns just in these past 4.5 months. If you also look at the Q4, the company has recommended a dividend of 30 rupees per share, which is 50% higher compared to the previous year of rupees 20. Just to look at how the year has performed for the financial year of 2024, it had the highest ever profitability in its history, while revenue was also up 28%, coming in roughly at 18,000 crores, while EBITDA has been maintained and shown a growth of roughly 70 basis points, coming in at roughly 13.8%. Net profit for the full year is also roughly up 1,800 crores. And if you look at the split between the revenue of cables and wires as well as FMEG, it might be the only negative, because the FMEG, which is the fast-moving consumer goods companies, the revenue hasn't grown over the past 3 years. So this year it's coming at roughly 1,282 crores versus 1,251 crores in the previous year. And for wires and cables, it has shown strong 15 to 20% growth, coming at 15,000 crores. While we look at the EBIT margins as well, wires and cables have shown roughly 160 basis point increase to 14.7, while the FMEG business had a negative 7% EBIT margin compared to flat EBIT margins compared to the previous year. So a little more commentary on the FMEG business and why this big EBIT fall will be key in the company's commentary. The company did a very strategic price increase as well, which has led to margin increase, and other initiatives in the financial year 2024 were that the capex has increased 87% compared to the previous year, coming in at 860 crores, while its market share has also gone up roughly 8% from its time of listing, coming in at 25% versus 18%. Finally, the company is very net cash positive at roughly 2,100 crores. And since listing in April 2019, the stock has given roughly 886% returns. When we compare that to BSE Sensex, it's given roughly 200% returns, and the Nifty 50 at 186%. So overall, strong performance by Polycab. We will need some more commentary on the FMEG business, but overall decent performance. Back to you.
All right. So Polycab, the big story this afternoon, the margins have contracted, but that profit jump has enthused the markets. Kunal, on the charts, do you like Polycab even now?
I think already the stock has rallied a lot, and I think fresh new highs for the stock. So you can say now sky is the limit. But yes, definitely, I think I'll be a buyer on dips here. 6,025, 6,030 could be an added level to initiate long positions, keeping a stop loss of 5,950, and again looking for fresh high levels of 6,400 on the upside.
Okay, so that's the word on Polycab, 6125. You know, the thing about Polycab, if you pull up this year's chart, you will see that when the news flow came in, the negative news flow came in about 3 months ago, the stock went down all the way to 4,000, 4,100, what have you. From there, and it shows 11% move this year, but if you look at from the lows, from a 4,000 level to 6,135 in a matter of maybe 4 months, Polycab has given 50% returns. I mean, that's the kind of fall. That's the kind of fall it was, and that's the kind of up move that we've seen in Polycab. And you know, quality companies tend to come back. This one is no different. What a superb set of numbers. But you have to argue, Tamanna, that the opposite is true for Intellect Design in the session today, when for all the wrong reasons, the stock is down 13%. Rucha's, of course, analyzed all of these numbers very closely, and she joins in to tell us why this 13% fall and what's next, Rucha. Why such a steep downtick today?
So Niraj, as you rightly mentioned, stock had hit an intraday low of 16%, but we can attribute this to three key takeaways, right? Number one is the weakness in the cloud and SaaS revenues. Number two is the termination of the GEM contract, which got completed later in the December, because of which this quarter had a tad revenues a tad below. And the company mentioned that it lost a $50 million deal in India from a bank due to less pricing by the competition. So this likely states that everybody is looking out for revenue growth in a very uncertain macro environment. Now, the company also mentioned that it is seeing slowdown across the sector and delay in closing of deals, which we also saw with the top tier Indian IT companies. However, the company is still optimistic because the deal pipeline is strong and it is guiding for a revenue growth of 15% adjusted for the GEM revenues in FY25 and later on 20% of revenue growth.
So Intellect Design's weak numbers really have seen that stock taking a beating today. Kunal, anything in that space that you're tracking? I don't know if you're looking at Intellect Design, but then, let's take a look at the larger IT space as well. And a very, very weak day for that index, except for, like, a Coforge mainly. Any of these on your radar?
Yeah, I think that is what, if you look at the correction, what we had got in the IT space, majorly from the large caps and even from the mid and the small caps, Intellect was something which was only trading in a sideways. And post the result, now the breakdown has come in for the stock with volumes. So I think follow-up move is very necessary. If Intellect continues to sustain below the marks of 950, then we can see this selling pressure continuing even towards the mark of 825, 800 levels on the downside. So for me, it's a wait and watch situation for Intellect at the current levels. On the IT space, yes, Coforge had seen some bit of buying in today's trading session. So clearly some kind of respite what we can see in the stock in the very near term. Already the sell-off has been very aggressive into the stock. So just for a pullback play, one can look to initiate longs for targets of 4,600 to 4,800 on the upside.
Okay. Well, that's IT for you, but remember, a clutch of these names have come off quite rapidly, even at the mid-side end, by the way. It's not just the large cap IT names, mid-cap IT names too, Birlasoft, non-IT names, ERD, the likes of KPIT, etc., are all down in trade today. What's done really well, though, it's catching my eye, is Hindustan Zinc. Its stock is up 13%. Pull up the intraday of Hindustan Zinc, and let's just see what the stock is doing. Look at that surge there, 13% higher. I think the JSPL, Jindal Steel and Power 2, has actually had a good run. So metals seem to be doing okay, and diagnostic companies seem to be doing okay today. So Dr. Lal Path Labs post numbers is up 6%. I believe Metropolis is up about 4%. And maybe Thyrocare is up too, I don't know. But was up 6%, 4%. Metropolis now up 2%, but still in the green. Thyrocare about 1% higher. So I think that's the other set of companies that are doing well. Anything in metals though, Kunal, that catches your eye, Hindustan Zinc in particular?
See, I think if we talk about Hindustan Zinc, already the rally has been very sharp. So I think current levels, fresh buy doesn't initiate. But one stock I would like to highlight over here is Vedanta. A clear-cut uptrend, a strong breakout in the stock, what we have got. High low formations are intact. We can expect further upside into the stock. So currently trading around 409, 4010 mark. One can initiate longs at the current levels, keeping a stop loss of 398 on the downside and looking for immediate targets of 422 to 430 on the upside.
Meanwhile, Bank of Baroda numbers out, first cut coming in and positive on the face of it as, we're seeing the numbers, NII up 2.3% on Bank of Baroda over there. We've, remember, seen a fairly decent set of numbers, at least on the PSU bank side of it. The net NPA is at 0.68% versus 0.70% quarter on quarter, so that's come down just a tad. Net profit is up 2.3%, so no big shakes over there, but positive 4,886 crores. Gross NPAs have also come down at 2.92% versus 3.12% The stock responding fairly positively at this point. We'll be getting, of course, more details on the Bank of Baroda numbers as well. But meanwhile, an interesting note on emerging markets from Citi, and Niraj has all those details. And Niraj, don't we love anything that compares India with China and India positively at that?
Yeah, I mean, markets should love it. But Tamanna, it's very interesting that they have on that whole basket of EMs that they have, while they admit that India is expensive, they say that India is still an upgrade for them because of multiple reasons, but predominantly the benefit that India is getting from strong EPS momentum and projected growth. So that is to my mind and the note, that seemed to be one of the key reasons why they have upgraded India to an overweight rating. So, by the way, they have downgraded China, as you said, rightly so. They have downgraded China because they say that China's recent rally has occurred despite weakening fundamentals, and therefore now enough is enough must be effectively the kind of call that they have made. Now, why India, you would ask, from these levels? The target is just about 7% higher, by the way. So the Nifty target for March 25, a year from now, is about 2300, which is about a 7% uptick. But they say that valuations at circa 20-year, 1 year forward are just about one standard deviation over the long-term averages to the EM basis. And that's not too expensive. And the earnings growth is looking very good. So the earnings revision trajectory is broadly stable and trending better than the long-term averages. And frankly, over the last 5 years, with a double-digit growth on the Nifty earnings every single year for the last 4 at least, you have to argue that the current earnings trend is much better trending than what the previous whole decade would have been, to be very honest. Now, within this, what is it that they like? 2 key reasons. They believe there is good momentum in public capex and private capex is gradually improving. And on rate cuts, they mentioned that they expect RBI stance change in June and the first rate cut in October, all of which could also aid. Now you will ask what are the key sectors that they are betting on, and I think let's end this with that. They are overweight. The key overweight is PSU utilities and defense, industrials, banks and insurance. Very interesting that PSU utilities and defense are amongst the top draw for them. What is not good for them? Consumer discretionary, I believe, is not something that they like. They don't like IT services and they don't like metals. So there's a long and short of the Citi note, but Tamanna, you are right. I mean, effectively, upgrade to India, not so much to China, and upgrade to India despite that India is one of the most expensive markets in their coverage universe.
Yeah, one reckons that I would say temporary jitters that we're seeing ease up after the 4th of June, and then the whole sort of India story leg continues once again, and that's really the opportunity. We'll talk more about it, but after a very short break. On the other side, we're joined by Motilal Oswal, Siddharth Khemka. Stay tuned for more.
Back with India market close right here on NDTV Profit, and the market's stable. Let's get in Agam to try and break down the FNOQs for us. Agam, just trying to understand, is there a material change between what was happening until yesterday and something that might have changed today in the derivative space?
Right, there actually hasn't as much. In fact, even there have been a lot of updates through the course of today as well, in terms of earnings, in terms of updates beyond just equity markets. And we actually haven't seen too much traction or change for that matter when it comes to the Nifty. It moved earlier on the session above the mark of 22,000, and that's exactly where it is right now. The Nifty moving up by around 0.5%. Unwinding, of course, a lot of shots into the system yesterday, a lot of that covering coming through. So short covering coming even as we see the open interest decline by around 2.5%. Moving on to the bank Nifty, that's where we have a little bit more traction in terms of the open interest increase by nearly 1%, but the index remains flat. In the options market, a lot of activity continues to stay within and below the 22,500 call mark, and of course on the lower end we continue to keep an eye on 21,500, 22 or 21,600. And moving on to your overall open interest distribution picture, it is 22,000 essentially where we have the most amount of calls and puts being written in today's day of trade. Moving on in terms of stocks, well, we have seen some interesting moves coming in. Polycab looking at a whopping 6.5% up move. At one point in time, it was up nearly 9%. A lot of longs there, along with Dr. Lal Pathlabs. Again, a good set of numbers coming in. For stocks which are seeing unwinding, Godrej Properties and MGL. On the other hand, looking at short covering for Bata Coforge and Abbott India. It's turned out to be a fairly steady day of trade, but we must remember, after a lot of volatility through the course of the week, and I reckon just a tad bit of those shorts are being covered, but we can't really rule out uncertainty going into the next few weeks either.
Thank you for that, Agam. What's happening with Hind Zinc? Hindustan Zinc having a crazy day. Jindal, JSW Energy, their entire pack doing very, very well. Not just a Polycab, but even a Dr. Lal Path. Dr. Lal Path, of course, because of the numbers. UPL up about 8%. Honeywell also doing well. So you have a good streak. Broadly, your advanced decline ratio has also been improving. All right, Siddharth Khemka is joining us now of Motilal Oswal Financial Services. And Siddharth, great to have you on the show. You know, this is a time when the markets are also wondering what is happening next. And you reckon that the primary driver of that uncertainty perhaps is the way that FIIs have been behaving. If you pull up data and if you look at the kind of FII fund flows over the last 8-10 days, especially in May, they have been triggering the sort of sell button. And do you think that's the primary concern right now?
Yeah, very good afternoon, Tamanna. So I think, yes, that is one of the concerns that the market is definitely witnessing. If you look at FI selling was there in the previous month, entire month of April, we have seen consistent selling by FIs. And we saw in between the VIX falling to as low as 10 and now sharp jump towards 18. Clearly, there are two major events that Indian investors are looking at. A was what was the Fed commentary and outlook in terms of the interest rate cut, which unfortunately is getting delayed every meeting. And then you have the ongoing elections and the news flows regarding the voters turnout and the likely outcome based on certain predictions. So I think these two major factors are driving investor sentiments in India. FIs definitely, I think the delay in rate cut is making them book profits, A, because of the delayed rate cut, and B, because of the big event before which I think there is some lightening of positions that they are doing in the Indian markets.
Well, but the Indian markets and the Nifty at 0.42% is doing quite well. If viewers, if you had seen the morning show today, I think the three of us spoke about the possibility of this happening, because when we're doing the trade setup, and that's the opening of the show, I think Tamanna, me and Samina were talking about how what spooked the markets essentially was the possibility that there was one large fund or some US-based funds which had there was a chatter of them selling India positions, and informed voices had suggested that the specific fund selling, which was the talk of town, was almost over. Maybe some bit of selling was left, and which is why I think we had spoken about how that there might be today might mark the near-term bottom of sorts. And just that, while there is a lot of conversation, Tamanna, around how the lower voter turnout might be the reason, people might find reasons to throw at a market fall, whereas the actual reason, which is the FI selling, which took the market down, was on possibly on completely different reasons than elections. It was essentially this kind of selling that was happening.
You know, that you have to put that into perspective, Niraj, and you're absolutely right. Look at the role of algo trade and how that has also grown in the derivative space. So a lot of these sell decisions are not even being made anymore by human beings sitting there and thinking, oh, China, India, election, voter turnout, blah, blah, blah. It's actually being triggered by algo, and then, you know, very often you have retail investors and small investors also getting caught into it on the derivative side. So that is one part of it. The other part, if you recall our conversation with Cameron Brandt, talking about the reasoning behind FII sale decisions, and it's not necessarily an India story. It's all in a context, right? So if they want to increase, for example, flows to Vietnam, etc., sometimes it's happening at the cost of India. It's an overall picture of emerging markets in which the decision on India flows also sits.
Yeah, and so in that overall context, when you have one fund which might, as per dealing rooms, have had to compulsorily wind up the positions because it was liquidating or what have you, and if that number is large, and it happens at the same time, you know, 7,000 crores day before yesterday about 6,900 crores, then you suddenly feel the pinch and tremors on that particular day, as was the case yesterday, as we saw. But, I mean, suffice to say, today seems to be a completely different day.
Yeah.
If it was indeed lower voter turnout fears, then today might not have been the kind of day that we've seen. The slides might have continued, and therefore you can make a little bit of an inference that there is some bit of selling that was there, a significant piece of selling which was there. Now that selling getting over or almost over leads to lower selling pressure, and thereby the markets being a lot more stable than what you would have thought yesterday at the same time.
Correct. And remember, Niraj, it's also a market looking for opportunities to take profits, an overheated market as well. Pre-election is generally quite volatile, one way or the other. Remember, it's also a very long election. It's
longest,
over 60
right?
days.
Yeah.
One of the longest elections. It's happening during an unusually hot summer. So I think the market also now digesting that a lot of factors could contribute, A, to low voter turnout, B, low voter turnout in the larger picture in terms of statistics does not necessarily mean anything either way. It depends on what the voters who turn up to the booth actually do, which of course we'll know on the 4th of June, etc. And nothing has fundamentally changed to, I would say, skew the perception that the market has come in with, which is towards policy continuity. So has anything actually changed since then? There's no clarity there. So I would say that, elections are on. They're on. They've been on for a while, by the way.
Yeah.
But you've seen this, and we had this chart up this morning. Let's see if we can pull it up. You actually saw that sort of pressure coming in only, the election trade chart, only after phase 3. Yeah. Not in phase 1 and phase 2 either. Yeah. So FI movement could really be the big trigger that we're seeing right now.
And a small addition to that is our campaign, which is Pledge to Vote, because the lower voter turnout tells us to bring this up again and tell viewers, tell yourself and your friends and family, please go out and vote. It's the most important thing. It's not just our fundamental right, but our duty as well to do that. Having said that, the markets today, as we said, a lot more stable. Now, amongst other things, PSU bank earnings coming in thick and fast. One of them was Bank of Baroda. My colleague Pragati is here to tell us what the breakdown of those numbers mean. Pragati, take it away.
Right, Niraj, thanks so much for having me. Bank of Baroda numbers came about 5-7 minutes back. While the numbers on the face of it have beaten Bloomberg estimates, not a very strong set of numbers if you see on a year-on-year basis. For instance, if we take the net profit is at 4,886 crore rupees, just about 2% up on a year-on-year basis. While it has beat the Bloomberg estimate, but not a very strong set of number. Core income or the net interest income once again up to about 11,000 7,792 crore rupees, just about 2% on a year-on-year basis. Asset quality definitely has improved. The gross NPA ratio is at 2.9%. Net NPA ratio again at 0.68%. Couple of basis point down as compared to the previous quarter. So asset quality showing an improving trend. That's exactly what the management has also guided us in the previous quarter press earnings, that yes, the asset quality would consistently improve. But what we are observing so far is that while the net profit is up, the operating expenses or the OPEX is something that is weighed down on the net profit. That's the first assessment of the numbers that we are getting, because we are seeing that the rise in total OPEX is about 14% on a year-on-year basis. And of this, if we see the breakup in terms of employee cost and other OPEX, the employee costs have been up the maximum, that is 20% year-on-year. We'll wait for a clarification from the management definitely on that front. But for now, the numbers look stable, but not really beat in terms of the street estimates. One point, Niraj, I would really like to point out is that about 2 or 3 days back, RBI also lifted the curbs from Bank of Baroda's mobile application. So basically in October, RBI had placed curbs on BOB World App's mobile application, and the customer onboarding was stopped. So while we were looking forward to the management's commentary on that in this quarter, now we know that the curbs have already been lifted. So that will also be interesting to watch out for as to how the management plans to recover its customer onboarding and the numbers once the curbs are off. Back to you.
Okay, thank you for that, Pragati. So Bank of Baroda has not been received very well. A slight uptick after the curbs were lifted, but it's not really helped overall. Siddharth Khemka, I just wanted to get your view, not just on a Bank of Baroda, but we've seen State Bank of India, Punjab National Bank. You know, your PSU banks have been the darlings of the street. Do you think the quarterly numbers have justified that prime position?
So, Tamanna, I think if you look at some of the other numbers as well, maybe if you also include CanBank in the list, there has been definitely a dismal number that has come in, especially on the front of the slippages and the provisions. Luckily, SBI, which is the largest, had lower provisions compared to expectations, and hence I would say that clearly among the lot was much better numbers compared to PNB, CanBank, now Bank of Baroda. So we have seen a lot of re-rating that has happened, and a lot of improvement in the quality of earnings for the PSU banks over the last 1.5 to 2 years, and that has led to the re-rating. So there could be 1 or 2 quarters of blip, but I believe with the economic growth and the focus of these banks to improve the operational performance, the overall view on PSU banks continues to remain positive. And again, I said there could be 1 or 2 quarters of blip in the reporting, but overall view is positive. We prefer SBI, which is the largest of the one. Very strong numbers. They reported the outlook is decent and positive. And even internally, we were discussing in the morning meeting why SBI cannot trade at a valuation which an Axis bank does. Definitely ICICI and HDFCs of the world trade at a very high premium, but an Axis at 2 times and SBI at 1.5 times, given similar growth and similar return profile, the discount is no longer warranted, is what we believe. And we believe over the next 2-3 years, with the improvement and consistent delivery in growth, and SBI could also command such kind of valuations going forward.
Okay. Well, that's SBI, PNB, BOB, and a clutch of those names. You know, today what has recovered remarkably is Asian Paints. For all the brickbats that it's received from brokerages, the stock has certainly gone up in trade, 2.5%. So some semblance of sanity after the massive gashes that we saw yesterday and day before as well, about a couple of percentage points off then too. But in today's session, has recovered. Siddharth, you would use this opportunity to buy into an Asian Paints, or you believe there is some pain there?
Yeah, Niraj, we would definitely avoid Asian Paints. We believe there is near-term pain. The numbers were clearly a miss. We see margins pressure in FY25 going forward as well. There has been price cut. There have been demand pressures because of down trading and competitive pressures. And we believe that the current elevated margins may not sustain in the near term. And given the low growth that the company is reporting and the high valuations, historical high valuations, clearly it's an avoid at current juncture.
Okay. Kunal, quick word here. Asian Paints, there is also some gains, for example, today in a Hindalco, which has recovered a little bit of lost ground. So some of these stocks are doing well today. Any thoughts? Asian Paints in particular?
I think on Asian Paints, if I talk about, I think the stock is on the verge of a near critical support, 2700. And we have seen the stock on the weekly chart bouncing from those levels. But looking at the overall trend for the stock, it is still trading in a downtrend. So for me, if the stock has to turn bullish, it has to surpass again 3000 decisively. If that is taken out, you can see momentum building up towards 3200 mark. At the current level, I will not be a buyer. I'll wait for the breakout above 3000. That will negate the entire downtrend, and then we'll see the up move coming in.
Okay, speaking of Asian Paints, by the way, Amit Singhal, we'll try and hear from Amit Singhal as well. He spoke to my colleague Agam and spoke about what's happening there. But I buy Tamanna's point on what is really gone berserk, and that's Zinc. That's up 17% now. It's hit a fresh 52-week high of 533.7.
Also all-time high, by the way.
Also all-time high. Similarly for Zomato, all-time highs, and that stock is not up 16%, yes, but it's done really well for itself. So Zomato is doing well. And by the way, what is also hit highs today are gold and silver.
So my theory this morning, I don't know, I will probably see a tweet at some point from the Blinkit management. They usually do about how many XYZ gold coins they, have sold online. But 10-minute deliveries for Akshay Tritiya, 4 gold coins on Blinkit. And of course, all the others are doing it. They're not all listed though. So I wonder if people are really using this opportunity. I mean, the variety of things you can buy in 10 minutes now is insane. So maybe that's, doing well for a Zomato. Siddharth, something that you track, Zomato? Any views there?
Yeah, Tamanna, so we definitely track Zomato. It is one of our preferred picks within the mid-cap space and has done quite well. I think the road to profitability is something that clearly was liked by the market. And of late, what has been what the investors have been liking is the sharp improvement in the operating metrics for Blinkit. This was one acquisition sometime back. People were very negative about investors specifically about Zomato going and buying stake in it. But now the private equity valuations for Blinkit shows that it is valued much higher than the Zomato itself. And the profits from Blinkit could be much higher than the contribution to profit could be much higher than the Zomato's food delivery business. So the quick commerce business is something that is really picking up with the company increasing the platform fees, and which is well accepted by the market. I think that is a sustainable way of growing the delivery business in India, and definitely it fascinates how these companies are able to deliver within 10 minutes in large cities like Mumbai, Bangalore, Hyderabad, and the like. So overall, business-wise, I think...
Siddharth, did you order gold coins online today?
I don't know about that. I just heard from you. I will definitely ask my wife to go and deliver right away.
Yeah, I mean, why not? Because if you want to follow that tradition, and you don't have time in a work day, then definitely it's an option. All right, it's going to be an exciting sort of Friday evening, if that's the kind of thing that you want to spot as well, because auto majors Tata Motors and Eicher are set to report their Q4 numbers today. Definitely an exciting evening for Puneet, who tracks that sector. Puneet, what's the preview?
Yeah, exactly. A lot of action today on the auto side, and both these results are expected to be positive. Starting with Tata Motors, they're expecting a revenue growth of roughly 15%, coming in at 1,20,000 crores. While on the EBITDA basis, we are expecting EBITDA to come in at roughly 17,400 crores. Margins are going to be one of the key positives for Tata Motors today, coming in at roughly 14.4%. which is a rise of roughly 220 basis points compared to the previous year. While on profitability, it's expected to come at close to roughly 7,000 crores, which is a 25% gain from the previous year. For Eicher Motors as well, we're expecting strong results. Revenue growth of roughly 13%, while EBITDA is expected to rise to roughly 1139 crores, with margins coming in close to 27%, which is also a 200 basis point rise. For profitability, it is expected to rise 18% for Eicher Motors, coming in at roughly 1068 crores. We also looked at what brokerages are saying for both companies and things to look out for. So for Axis, for Eicher Motors specifically, Axis sees that revenues will rise on the back of strong volumes that the company has reported. They also see that increase in average selling price due to price increases taken in the last 1 year will aid margins, while EBITDA, supported by a lower mix of Hunter, which is in the 350cc space, as well as a higher mix of exports, will kind of partly offset the higher advertisements that the company has taken. While for Tata Motors, the total sales of JLRs have risen roughly 16% for the quarter, coming in at roughly 110,000, while Nomura is seeing that the PV growth will aid margins as well as revenue growth, coming in at 23%, while commercial vehicle growth for revenues is roughly seen at roughly 5.6%. So overall, decent set of, actually really good set of numbers expected for both these counters. We'll see what the management has to say in the conference calls as well. Back to you.
An interesting Friday evening you have lined up for you, Puneet, as you track what the management of Tata Motors say. The stock is doing well. And look at the entire auto pack. I would say a bit of an outlier on an otherwise very tricky kind of a week completely. And Hero Motor really top of the pack there. Siddharth, your take on the auto pack and especially at Tata Motors ahead of the numbers?
Yeah, so Tamanna, I think if you look at the overall quarter, we were expecting strong numbers from the auto pack. Generally, we have seen the fourth quarter is usually the seasonally best quarter, both on a YOY as well as on a Q-on-Q basis. For the quarter, passenger vehicle segment had posted a healthy growth of about 19-20%. Two-wheelers was about 14% in terms of volumes. We have seen some of the two-wheeler companies, Hero Moto and TVS, coming out with very strong numbers out there. So I think something that will continue for the auto numbers. The expectations is pretty strong. For Eicher, we are expecting a 10% revenue growth on a consolidated basis, while a 25% PAT growth. Definitely some margins improvement that we are seeing and sustaining at high levels because of the mix. Even for Tata Motors, I think the overall results expectation is pretty strong, both in the domestic market as well as in the global JLR business. So India business, we see that again driven by passenger vehicle segment. The passenger vehicle volumes grew about 15%. The CVs were a kind of mixed. However, margins, especially in the JLR, will drive the overall numbers. For Tata Motors, we are expecting a 14.2% consolidated EBITDA margins, which will be much higher both on a sequential as well as on a Y-on-Y basis. So overall expecting a 14% growth in net profit. If you look at again from the numbers that have come out, Hero Moto has been something that we have been quite liking. It is a preferred pick within the overall two-wheeler space. Volume recovery, the monsoon, which is predicted to be healthy this time around, should aid in the rural demand. And Hero being largely domestic driven is most likely to benefit and add to it the valuation comfort that Hero has compared to some of the other two-wheeler stocks. So that is our preferred pick within the two-wheeler space. Hero Moto, we have a target price of 5,320 on that.
All right, so Hero Moto continues to have a lot of steam left in it, and Motilal Oswal's target price is 5,320. The stock already doing very, very well. Kunal, your take on any of the auto packs, Hero Moto, Tata Motors?
I think Hero Motor is something which we also like a lot. I think on technicals, if we look at the monthly chart, the stock has given us a flag and pole breakout, which is a typical bullish continuation pattern. So looking at the pattern, the target would come for the stock over here is 5,250. So 5,250, it can head towards 4,880 currently it is trading. You can accumulate at current levels. If you get any dips, utilize that to buy. 4,600 now becomes a very, very strong support for the stock.
Kunal, your top STBT or BTST?
See, See, I think the top STBT stock over here will be ABFRL. The stock has in today's trading session given a volume-based breakout on an intraday chart. Plus, it has surpassed the last 3 days high as well. So clear-cut volume is visible. Breaches 20-day moving average as well with volumes. So one can initiate a buy at the current levels of 258, keeping a stop loss of 249 on the downside and looking for targets of 270 on the upside.
Kunal, one very quick question. I don't know if we spoke about Zomato, we spoke about it with Siddharth, but this uptick that you're seeing, would you buy into it for a trade?
Yes, exactly. The larger term trend remains very attractive. High low formations are intact. In fact, today's trading session is a fresh breakout from a consolidation phase. So 200, 201, which was a resistance, which is taken out today, and we are going to close above it. So clearly a buy for me at the current levels. 195 is the stop loss, and 212 to 218 would be the targets on the upper end.
Gentlemen, have a great Akshaya Tritiya, fabulous weekend. Tell your wives, or rather, buy gold for your wives through Zomato or otherwise, and see you soon.
Thank you so much.
Thank you so much.
All right. Well, let's start wrapping up the markets for you, and about a minute left. Just get the heat map straight. We know that the indices are doing well. In fact, closing in almost at not at the high point of the day, but the high point of the last 1 hour for sure. But the heat map on your screen, and you see very little red. IT to an extent, Cipla, though interestingly Kotak Bank enters the fray of stocks which have corrected today, about 1% lower, but Cipla results miss, hurting the stock margin miss, and IT being the losers. The gainers, it's PSUs. A complete turnaround to yesterday's session. So look at BPCL, Power Grid, NTPC, those three in the top 10 for sure. There is also ONGC in the top 15 and Coal India in the top 20. So a lot of PSU names there. What else? Hero MotoCorp, clearly the hero of the week, doing very well for itself. Asian Paints has bounced back. JSW Steel has done well, 2% higher. And Eicher Motors ahead of the numbers is up 2%. Interestingly, Bharti too is up about 1%. And Adani Ports is up about a couple of percentage points. It's been steady throughout the trading day today. So good going for that one. Mid caps too, Tamanna, a clutch of very interesting movers today.
Absolutely. I mean, the turnaround in mood is what is, a stark, and that what really strikes me. The Nifty mid cap looking like it's going to close nearly a percentage point up. So much so for the small cap 250 as well. We should just quickly pull up the advanced decline ratios just to get a sense of how the market breadth has really improved. Look at it right at the fag end compared to the morning. So choppiness mid-morning, and that's a trend that we're seeing over all of these days. You get a very choppy mid-morning, but you've seen a vast improvement. So save for an extremely bad day yesterday. Niraj, if you cut out yesterday's extremely bad day, I would say markets have been range bound and choppy. Yesterday was the ouch sort of pain point, and there could be a host of reasons like you were saying, algo trade, hedge funds, etc., any of those coming into play. So all in all, not bad at all. I just want to pull up what has really worked, and let's pull up the S&P 500 gainers and losers. As always, the results continue to be a big driver, save maybe for a Hindustan Zinc, 16% up. What a star of the day it has been. Polycab is one, up on the back of results. Jindal, Honeywell Auto, UPL, all of those doing fairly well. Here, Intellect Design continues to be your big loser. Bank of Baroda also, because of the numbers more than anything else, has seen that pain coming in, as has Birla Soft. If I were to mark out one sector which has hurt today, it is the IT pack. We'll just pull up the indices. You'll see the Nifty IT completely up there as the biggest loser of the day, while metals, thanks to a Zinc, has done well. And within the IT internals, I would reckon, apart from a Coforge, everything else has been fairly weak. So because of a TCS and Infi dragging down the markets today, you've seen an okay kind of a close. Without those two, you were doing even better today, wasn't it?
Certainly, and that's the long and short of the market. Yes, Tamanna, you're right, absolutely right. Okay, so on that note, from Tamanna and me and the team that has put this show together, thanks so much for watching. Happy Akshaya Tritiya and have a great weekend.